Tellor, or the TRB token, is one of the top performers today. The question is, what's driving this and how much higher can the price go? Let's have a look at the on-chain data. Let's see who's buying, who's selling here. Let's have a look at whether or not it still makes sense to buy into TRB right now. In the last 24 hours, the price increased by more than 30%. We are now close to $50. This month, we went up by 63%. Now, this is not the first video on TRB on this channel. There were several videos before because this token was known for being manipulated by the market makers. The market makers bought a lot of the token over the counter, OTC, for a discount. And then the asset got manipulated with a massive pump and dump. The price went from $10 all the way to $180 in the span of just 2 months. And so really, it's not the fundamentals that drive the price of Tellor. It's in the end all leverage. We're going to look at the on-chain data. We're going to look at who's buying and selling. We're also going to look at the perpetual futures market. So how much short-term leverage is there currently in the price? And are potential price rallies maybe driven by hunting for shorts, by short liquidations, by short squeezes? Now, on-chain, on Ethereum, we've got more than 10,000 holders. Not all of those holders are created equal, right? Some of them might just own a few cents of the token, while others might own hundreds of thousands of dollars. Let's first have a look at what happened in the last month, where the price went up by 63%. What we see over here is the number of new users in the last month. It tended to be very, very stable, but then something happened yesterday. We can ignore the latest data point because today has just started, but for whatever reason, suddenly a lot of new users entered the token. Now compare this to the number of returning users that also spiked yesterday. Have a look at the number of holders over time. Now there are 3 charts over here. On the left side, we see the retail investor. On the right side, we see the whale investor, and in the middle, something in between. To be counted for the wallet on the left, that wallet has to hold at least 20 TRB tokens. At the current price, that's roughly $1,000 worth of the token. The number of small retail investors grew from 1,000 to 1,050 roughly, so a 5% increase. The number of medium-sized investors, so that's now at least $10,000 worth of the token, that went from 207 to 228. So a 10% increase. The larger wallets bought faster. Now on the right, we see the whale wallets. That's the wallets that have at least $100,000 worth of the token. That went from 66 to 47. So that's more than 10%, almost 15% growth. So the larger the wallet threshold, the more the cohort grew. The whales bought faster than small retail. Let's have a look at the all-time development. Here's the number of holders. And here you can see the manipulation of the market makers. When there was the first massive rally in Tellor, especially the smaller wallets sold their stake. They took profit. The big whales, though, they were not confused. They continued accumulating. Here's the number of buyers and sellers over time. On the left side, just the absolute number. On the right side, normalized to 100% per day. We see how the token stays active over time. There's always a few buyers and sellers, and we can see there's sometimes an overhang of buyers. In fact, it happens most of the days. And the sellers are the one that make the price. Right? When the price is going down, despite there being more buyers than sellers, it's just the sellers that move more capital. Now, the real price discovery, at least in the short term, happens on the perpetual futures market. So on the levered bets on the price. Just have a look at where the trading actually happens. It's not that much on the decentralized exchanges anymore. It's not anymore directly on Ethereum. This is a spot market, and most trading volume happened on Binance directly because Binance bought a lot of the Wintermute market making stake during this massive turmoil, so at the beginning of 2024. But compare those 150 million with the perpetual futures market. It's much larger. It's 1.7 billion. So more than 10 times the trading volume happens on the perps. This is where the decision is made if the price goes up or down. And so we can clearly see when there's a lot of people that bet on rising prices on the perpetual futures market, when the funding rate for the longs is very, very high, that's also when the price tends to go up. So we see this at the beginning of this chart, right? The funding rate was massive, and so the price appreciated. Once the funding rate came down, the price also tended to normalize again. On average, people tend to bet on rising prices, not on falling prices of Tellor. So the longs have to pay the shorts most of the time. Here is the open interest of Tellor over time. The very first pump and dump in 2021 happened without the perpetual futures market, but the second pump and dump in 2022 happened with the perps. And then of course the third one with Wintermute also happened based on the perpetual futures market. So there's a strong correlation here, right? The more bets there are on the price, the higher the price tends to go. And recently we see again a lot of interest through the perps. Now we've seen more open interest in the past, and so there is more upside potentially for the spot price as well. But what should be clear from this chart is that this is short-term capital, right? When people get into Tellor with perpetual futures and not with spot, that means that those people are likely going to close the position at some point. Financing is simply too expensive. So long-term investments happen on the spot market, short-term investments happen on the perpetuals. When the price is going up because of the perpetual open interest, that means at some point we're likely going to see a deflation again. Maybe not today, maybe not tomorrow, because historically we have seen much more open interest. But it's important to watch this number closely. This, by the way, comes from coinglass.com. If you want to follow this a bit more frequently, just go to CoinGlass and search for TRB. The reason, of course, for the price to pump like this is to generate liquidation fees. So with this recent rally, a lot of shorts got liquidated. And so let's see how this develops. How the liquidations develop, how the funding rate develops, and how the open interest develops. When the open interest spikes, it's probably time to bet on falling prices. But right now we are not yet there. I would not be surprised at all to see TRB at $100 just a few days, maybe a few weeks from now. Here is Tellor relative to Bitcoin, and it shows us potential tops and potential bottoms. And again, this might just be a start of a potential short squeeze. As more and more people bet on falling prices, the market makers are likely going to push this price higher. Now, fundamentally, the problem is that returns are very much concentrated in a few assets. Most assets tend to go down, and there are a few altcoins that make the multiple X returns. And the problem is those assets change over time. What worked well yesterday might not work tomorrow. And so it's always a game against the odds. And so we can't really deploy a lot of capital in those trades. If the likelihood of losing is very high, it means we can't deploy too much in the position. It also means we can't necessarily diversify, because if we now own 10 or 20 tokens, most of those tokens are losing. And if then the few outliers make up for all the losses is a completely different question. It's very unclear. Now, there is a way to make money a bit more consistently, and that's actually trading the larger tokens. The issue with the larger tokens, though, is that they move very much in tandem with the overall market. As in, when Bitcoin goes up, then Solana tends to go up as well, Ethereum tends to go up as well. But there are movements within crypto where sometimes a particular asset class is more preferred than another one. And we can play on that relative valuation. We can play on attention moving from A to B within crypto without having to try to find the few winners. For example, have a look at this. This is the Solana dominance. So how much of all of crypto is currently in SOL? And there seems to be somewhat of an invisible ceiling between 3 to 4%. This is where Solana historically had been very expensive. Or have a look at this. This is the Ethereum dominance. It tends to be very cheap when only 7% of all of cryptocurrencies market cap is in ETH. It tends to be expensive when it's around 20 or 21%. And so we can benefit from this independent of where the US dollar valuations go. So if Bitcoin is going up or down, does not interest us. The only thing that interests us is whether or not Ethereum will perform better than Solana, or Solana will perform better than Ethereum, just relatively speaking. So I saw that set up when Ethereum was extremely cheap in the middle of April. We got very close to the historical low that was formed in September of 2019. And so have a look at this. This is Solana relative to Ethereum. And when ETH hit that low point, I shorted Solana relative to ETH. So I was not interested at all in the Solana US dollar price or in the Ethereum US dollar price. I was only interested in the relative valuation. I saw we are high on the trading range, and I bet on that range coming down. So here's that post. It's from April 13th. I'm opening a relative valuation short of SOL to Ethereum using Venus Finance. More information will be provided in a few hours in today's premium update video. So I publish premium updates every 3 to 4 days. And then on May 20th, I closed the position. And of course, other members made money with this as well. But I want to share something here. This is when the position was opened. Here is when the position was closed. And I want you to look at the Solana value. Again, we bet on Solana doing worse than Ethereum. Solana itself actually went up during the time. It appreciated by 25%, but Ethereum appreciated more than that. It went up by more than 50%. And so we completely canceled out the macro. We are not interested at all whether or not everything is going up or down on a given day. We made money just on the relative valuation. So within those few weeks, we went from 43K to almost 60K. Yes, I know these kind of strategies might seem a bit complex, and why don't we just buy an altcoin and make it 10x? But again, it's all about risk-adjusted returns. If we want to bet significant capital, tens of thousands of dollars, or let's say relative to your net worth, high percentages. If we don't just want to play with play money, but we actually want to make real gains, we need to use strategies that don't have an 80 or 90% chance of failure. I see people making these mistakes all the time. I even see people making mistakes with their risk off position. So let's say they don't want to be exposed to crypto, they just want to be in stable coins, that those stable coins just stay laying in the wallet. But there are opportunities to make very nice constant returns even with stable coins. So this is 16% APR. This can be achieved on Hyperliquid without a single trade. This is all just automated arbitrage by the market maker. But of course, I've also got my risk on part of the portfolio. And here's something other people don't show. Most people just show individual trades and say, hey, this is how we always make money. Very few people are actually willing to share their overall portfolio performance. Now, I started trading on Hyperliquid on April 22nd, and here is my P&L over time. And since I'm sharing all of my trades, the members can just copy me. And this is actually very nice feedback. The same kind of portfolio development chart. This chart tells a story, first trying it without any support, and then afterwards, where this green arrow is shown, exclusively following Gerhard's trade and slowly digging out of the hole. If you've got the right risk management in place, there's actually a lot of money to be made in this market still. But actually, I don't want that everybody is just copy trading me. The community is about elevating our skills. It's about learning as much as possible, helping each other, finding market opportunities, and then of course capitalizing on those opportunities. So I've actually made more than 100 tutorial videos just on various topics within crypto, risk management, portfolio valuation, blockchain analysis. Feel free to binge watch this. It's actually nice to get those DMs. Hey Gerhard, I just wanted to thanks a lot for everything you've done. Since I've only been listening to you, I've been consistently profitable now. I just entered your, I've blacked this out, XYZ position as well. Or here, this is also another nice message. I'm not going to read through all of this. Feel free to stop the video. But yeah, if you want to join us, if you want to copy trade me, if you want to learn more about crypto, feel free to check it out. It's currently $125 per month. The price has actually been lowered because now the attention on crypto is much lower than it used to be a few months back. Once the masses come back in again, then the price will be back to $165. So if you're signing up today, you will never pay a higher price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.